Atul Suri, good morning. How shaky are the charts now? What changes after yesterday's price action? In the near term, foreign trader, how is life different?
I don't know for a trader how life is different because Monday would be a good day, Tuesday would be a bad day, and today would be a confusing day. So obviously that's something which I really don't know much about. But if I look at the larger term trends, is what I look at. I feel that you've seen a big sell-off today, which is as a follow-up to a large play that is happening out. So the market is still trying to find a base. For me, the number that would be important or something that would get me a little worried is when the market goes below 21,000. Why I say 21,000 is because if you look from Jan to now, the market has been having a bit of a time-wise correction. It's not that the index was running away 23, 22, 23, 22, and the low for the year has been around 21,000. So for me, if the market goes below that, yes, it would be worrisome. But otherwise, after an event like this, you will have volatility. Things will need time to settle down. Also, you remember that after a sell-off like yesterday, a lot of margin pressures, etc., also come into play because the problem was as to what happened on Monday. Even on Friday, if you look at it, the market was pretty okay, pretty sideways. In fact, it had 3 to 4 days of correction. It's on Monday that exit poll data really led to a massive amount of short covering, and a lot of people, got in expecting a run out or a blowout rally. And it is on the back of that you really have this kind of price action. I don't think, I mean, even we all are reading politics and with a little understanding. I think at the end of the day, the government continues. Yes, there will be certain pockets that people are expecting, people with money is moving from here to there, but at a very big market level, 21,000 would be my area of concern. Till it doesn't go below that, I think it will be more a case of a correction and a larger.
For the longest time, you've made a case that the real bull run is in capex, defense. Price action in capex and the so-called investment dominated stocks was strong. After
Right.
yesterday's price action and looking at the narrative this morning, is the party over there?
I don't think the party's over. I think that the trends that are there in these spaces are multi-year trends. Yes, some things could have run up a bit towards the end, towards the fag end in the month of May. I think that is getting corrected. So even if you look in the larger context, it's not that we have given away massively. Yes, whatever excessive had happened in May, that has given away. So I don't think that the longer term trend is destroyed in them. I feel that still it is going to be a cap good engineering led rally. If I look at it a multi-year time frame, in the short run, yes, in the next month or so, we may do have some reallocations. The narratives are changing, and Nikunj, narratives are changing every day. Monday morning, the narrative was something else. Tuesday, it's something else, and Wednesday, it's something else. So, as a fund manager, you have to look beyond it. I feel that this week will be a month of whiff of narratives changes. Markets will also be 1% up, 1% down. But I feel it will take a week for the market to settle down.
Oh, yeah, absolutely. Talk about Monday and Tuesday. It seemed like the narrative of a lifetime almost changed. But
Right.
Atul, what should investors do in this case? I know you've given us a mark for, or rather a watermark for the Nifty, below which it would get a little worrisome for you. But what about stocks and sectors right now? Suddenly you're seeing this re-emergence of FMCG and consumption plays come by. Is that a safe haven for now, at least, till the market finds its feet?
Yeah, I think so. I think it's a safe haven because also prior to yesterday, these sectors were doing nothing. In fact, it was a laggard sector was FMCG. So it's not that there were any big build-ups or any over ownership. This was a space where there was under ownership. And even to get to equal market weight, you will kind of have to see the kind of buying you're seeing today. So yes, there will be a need. The government will have new priorities. There will be some learnings, and the sense is that there is going to be a lot more rural push. Based on that, there is a pickup in FMCG spaces. I think pharma is also holding out pretty good in the fall. And mind you, pharma, IT, and FMCG in the last few months have actually been the underperforming sectors or laggards. So that also sets things up that sectors that tend to be laggards or which tend to be underowned or ignored very often will see greater bounce. And that is what is you can see on the market or on the screen today.
private banks, Atul, the likes of an HDFC, Kotak, etc., which have just about begun their move, right? I think about 3 odd weeks back or so, if I'm not mistaken. Do you stand by those private banking names, or do you ease off from there as well? Because you never know how long they're going to actually take to give those breakouts that one anticipated till about 2 weeks back.
I said the thing is that they will be placed that those will be the places to hide because as I said that just as FMCG was not doing much, even private sector banks have been underperformers. And you will find that PSU banks were the ones where the alpha was being created. So I do think that people will look for safer havens. The kind of total bravado or the kind of total confidence that was there in the market on Monday has kind of evaporated. People have got a little more calibrated and in such a scenario, the first thing is to look for safety. And safety, people are looking in FMCG. I think once the dust settles, people will look for it in private sector banks. Pharma is another great place to be in, maybe some of the large cap IT. And these were, as I keep saying, were the sectors that were just not performing for the last few months. So these become perfect places to hedge or to find protection. I still feel that the larger trend on the longer time frame will be capex. Once the government settles, once the policies come, you will see again a revival there. But in the short run, yes, these three or four themes will be where people will hide.
Atul, morning. There's also that sort of caution coming about post everything that transpired in the markets over the last couple of days that it's going to be the large caps that will be at the forefront, and perhaps there is a little bit more comfort versus the small and the mid caps. Is that perhaps the view that you have as well when it comes to looking at the overall market construct?
Yeah, this will pretty much keeping up with the theme that, things that have done very well in the last few months will pause, will rest. And that is why even small and mid caps, they had continued to make new highs, whereas the Nifty was pretty sideways. So rightly so, either there will be some profit booking or, a certain stop losses being triggered. These will be in the places where there has been momentum. And these are the places or pockets where there was momentum. So this kind of moves will happen. These will be technical adjustments also happening in people's portfolios, traders, investors, whatever you have as a category will look to reallocate and readjust. But I still feel that this will be a week where it is anybody's guesswork. Yes, people are, taking kind of bets on it. But I think within a week or so, things will settle and a clearer picture will emerge.
Okay. Atul, I just want to spend a minute on this whole FMCG trade. Place to hide FMCG, IT, pharma. But should one be hiding right now? The other option is why switch? If the multi-year trends in capex are so strong, then take a 15% rate, 20% volatility, couple of months of no return, and then it will be back to square one. Why shift at all?
Yeah, so it's a nice, easy way is to talk about it, Nikunj. So you can, you can say it, but practically what happens is that people are sensitive to movements. We talk about long-term investing being 5 years, 10 years. Those are nice thoughts. But when you really look in the practical world, you'll realize that people look at portfolios weekly, monthly basis. That may not be the right way or the smart way, but that's actually the way of the market. And let me tell you, realistically, the way it is. It doesn't sound intellectually great, but that's what the market is all about. That's what investors are. So the fact is that as a fund manager, you have to also have defense as a part of your armory. In the long run, as I still continue to be overweight those spaces, but yes, one has to brace for short-term pains. And as I said, the real thing is that people do look at returns a little more often than they should be. Such times are actually times to not do that because as I feel that you don't have to wait for months, you just have to wait for a week or so. And I feel that the market will settle down. That's when the whole capex industrials, I feel, will revive.
Okay. Uh, when there is a shakeout in the market, new leadership always emerges. We've seen that. 2008, commodity and capex took a backseat, FMCG comes out. COVID, PSUs, they come out. Is the selling of currently of that magnitude that it will lead to a change in terms of leadership? You're knocking your head like this. Knock again.
No,
knock
not,
again.
no,
That's
no,
a
no.
knock again.
It's
I can
hardly,
see you.
it's
I can see your
hardly,
head.
it's hardly a sell. It's hardly a big shakeout. If you look at the market on 13th May, right, which was less than a month away, the low was 21,821. Today we are at 21,900. We are not even at a month low. Yesterday we did hit an intraday low. So what I'm trying to tell you is that you cannot compare this to 2008 or 2000 or 2020. Those are markets that fell 30, 40, 50%. Today, remember that on Monday we had actually made a lifetime high. So if you look at it, we are at a month low, not even a 6 month low. At 6 month low is around 21,000. So I don't think in any way is this a very big trend shift. Yes, there are corrections. Yes, little excessive happened. Yes, a little froth happened. That is kind of cooling up. But I feel the larger trend is still up. I feel globally it is up. In India, it's up. And I feel that the capex cycle is going to be the big theme that is to play out. From time to time, there will be adjustments. Month or 2 months of relative underperformance may play out, but the larger themes will play out. And no way is this fall anywhere comparable to 2000 or this. I mean, in percentage terms, as I said, we're just at a month low. I don't think it's anywhere comparable.
So, what to your mind could be the most important moving part which would tell us the markets are settling down or more pain is coming? One is, let's say, 21,000 on the Nifty, that becomes a line in the sand. Any other variables at a global level or a local level which will act as a canary in a coal mine, if I may use that word?
I don't think that you will have to look at spaces like I think PSUs. PSUs are the stocks that have been beaten the most. So once you really see that that kind of stabilizes or you start seeing plus days, that means that there would be accumulation happening. As I said, that I don't see it happening this week. I feel that this week will be a lot of price discovery, every day new thoughts, new ideas, new reports, everyone putting out new warnings. But in the larger scheme of things, this is no way a big correction. I think that the trend, the longer term trend is very, very intact. In fact, I feel that for people who were sitting on cash, and many were, in fact, waiting for the event, nearer to 21,000 will be a great time to deploy. What is the exact spot? Nobody knows. Finding the bottom, nobody knows. But I think that globally and domestically, we are in a very large bull market. And this becomes an opportunity. Yes, things will waffle, things will wobble, but this happens. You cannot have markets going up straight. If markets go up straight, it becomes dangerous. And that's what is really happening is that the steam, a little steam from the pressure cooker is being released. It's not that the pressure cooker has burst or anything. And this releasing of steam is important. So I continue to be very bullish on the market globally, domestically. And I feel that these are opportunities for investors who are sitting on the sidelines.
Let's say holding on to FMCG, pharma, IT, use this deep swell to do some spring cleaning?
Sorry?
No, if somebody is, let's say, sitting on FMCG, pharma, is it a good time to use the strength and perhaps exit your positions?
Not really, because if the rural thrust is going to come, which you practically think the government will have to do, these will do well. And Nikunj, at the end of the day, you realize that these sectors were not doing much. Not that people are sitting on, at least the trading community or who have been recently have been sitting on tons of money. Yes, between yesterday and today, they may move 5 to 10% in some stocks, but that's not really big. So if there is an allocation to that space, one should hold it because that is a new dimension that is being added to the plane. As I said, in the larger story, maybe 10% in government priorities may shift, 10% in sectorial themes may shift. Yes, there are adjustments happening, but I would still hold FMCG. I think that if the rural push comes, it will benefit this sector. Some other spaces may cool off, like the Adani stocks, case in point, the way they were on Monday, the way they behaved on Friday. So I think you'll have cool. So money will move from A to B. I don't see any massive outflows per se. It's just that money is moving from sector A to B, and that is purely a kind of play that everyone wants to take a little bit of protection after being very gung-ho and optimistic for almost the last 6 to 9 months.
Yep, absolutely. And I'm sure all of this as well will eventually settle down. Atul, always good to have you on the show. Thank you for taking the time out.
Thanks, Nat.
If you like this video, then like, share and subscribe to ET Now.